You got me running, got me running. Shake it, shake it, shake it, shake it. Raise your hands up, raise them up.
Okay, welcome everybody to the Forex Trading Asia Daily Currency Call, episode 289, 12th May 2021. So, this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risks. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, let's start things off with the dollar index. So we have Scott here, Scott Andrews from Forex Briefcase, Australia, to share his outlook on the dollar index. Scott.
All right. Hi, everyone, and thanks for joining us again. So, look, US dollar, as I mentioned in yesterday's call as well, we're just waiting on really the key piece of information is that US CPI month-on-month data. It's coming out at 20:30 tonight, Singapore time, GMT +8. So we are actually seeing a little bit of a lift. It did bottom out at around 90 flat on the index here. And we're seeing a small gain here as well, just on the charts with Samtrade. So, we did have, in particular, I want to touch upon Governor Brainard's speech. It was midnight GMT +8 time, very early this morning. And just a couple of points about what he mentioned as well. So, right now it's hard to say, we probably won't see a bit of a lift in the US dollar tonight. Although if we have a miss for any reason, that could send things lower. But honestly, I'm leaning towards bullish on the US dollar. I think we're just going to see some stability today, and then some, a tight trading range until that data comes out. But my concern is that, and what Governor Brainard mentioned, was that risks remain with vaccine hesitancy as well. So as things progress in the US, that's something to pay attention to. There are deadlier variants as well, and especially the resurgence of cases in foreign countries, especially India as well. So there's a couple things going on here in regards to longer term bullish sentiment on the US dollar. I'm a little hesitant to say we have a high price target, but honestly, I would say that for now, I'd love to see it pull back a little bit, and then after the data release, it's probably a decent catalyst to go long. Although we did have a miss last week, but really, honestly, I would say bullish sentiment on the US dollar remains, especially with a lot of prices are a lot higher in the US, obviously due to supply constraints. But I think people will just see the high number, and it's most likely looking like it's going to be a buying opportunity after we found a bit of a bottom here at 90 flat. So those are my thoughts on the US dollar today, guys.
All right, thanks for that, Scott. So right now, let's get into the currency focus today, which is the pound. So today we have Jin Dao Tai, founder of LCMS Traders, multi-million-dollar trader and an international speaker where he speaks in countries like Hong Kong, UK, US, Australia, Malaysia, Vietnam, Indonesia, and of course, here in Singapore, sharing his views about the FX market. So Jin, I'll pass the time to you now for the pound currency call.
All right, good morning, everyone. So we've seen the pound dollar move up quite significantly over the past couple of days. Just going to show it to you here on the charts right now. We started off the week at about that 1.4 level. And within the past couple of days, right, we started on Monday at 1.4. Right now it's hit and rejected, or it's rejecting that 1.4150 resistance. You can see here it's climbed within the last 2 days, a good 140 pips upwards, and now it looks like it's turning back down again. So why is it turning back down? What is there to look out for in terms of the pound dollar? Looking here at the Forex Trading Asia economic calendar, today we are on Wednesday. We've had some news come out. We've had a lot of speakers, FOMC speakers, early this morning. But at 2 p.m. today, GMT +8 Singapore time, we do have the GDP numbers coming out from the UK. Year on year, look at this, was minus 7.3%, expected to maintain in that negative territory at minus 6.1%. GDP quarter on quarter was 1.3, expected to be a minus 1.6%. So in terms of GDP, the quarter on quarter number plays a bit more of an importance in consideration. At minus 1.6%, it's primarily because of the UK being in that massive lockdown because of the virus. So, pretty much everything has been shut, not a lot of activity in the economy for the past quarter. So expecting that minus 1.6%. This might be slightly priced in already because, everyone knows they have been shut. Everyone knows that there hasn't been much activity. So minus 1.6, or even if it comes out at a minus 1.8%, it wouldn't be too much of a surprise. We might see some downside on the pound dollar because of this news, but I do believe that we might again see that resumption back up again, following that longer term trend as it moves upwards, especially if it can break above that 1.4150 resistance level. So just for those of you who are interested, why have we seen that big jump, that 140 pip move upwards on the pound dollar over the past couple of days? You can see right here, the pound jumps to 10-week high as a Scottish exit worries fade. There isn't going to be, it's very unlikely, or no chance of a referendum being held for Scotland to separate away from the UK. With that as a union, gives the pound dollar a bit more strength, or relieves that worry. So we saw that confidence, that strength come around for the pound dollar. So, that was a side note. But with the GDP numbers expected later, quite soon at 2 p.m. today, something to look out for, maybe some downside on the pound dollar, especially if it comes out at minus 1.6%. But remember, this is CPI Wednesday. So we have the CPI numbers coming out for the US dollar. As Scott was just saying, we might see some strength come around for the US dollar. At this point, I think any strength might be a bit, I'll go against Scott for once this time. I think that any strength we see from the US dollar might be quite short term. Why? Also because CPI month on month was 0.6%, expected a 0.2. So not a big change in terms of the CPI numbers here. And this CPI number could relate or could influence, further interest rate decisions from the US. But, so take this with a bit of pinch of salt. Manage your pound dollar trade a little bit closely. What I mean by that, showing it to you here on the chart, if the pound GDP numbers does come out quite weak, then we're probably going to see that move back down. Probably going to see that move back down on the pound dollar. I don't think it'll go all the way to 1.4. I think it's probably going to have a bit of volatility, bring it back down again. And if we do see that short-term US dollar strength with the CPI numbers later tonight, then we could see it come back down to about this point. So you're looking at a 50 pip stop loss for a good 50, 60, 70 pip take profit level, a 1:1 risk reward ratio at this point. But what looks a lot more attractive, or what I'll actually be hoping for, is that it does track down lower, maybe not as far, track down a bit lower before regaining that upward momentum. I'm looking for it to break above that 1.4150 level to head towards the 1.4278 resistance again. To continue that move upwards, you would be looking at about 1.4165, a very tight stop loss at about 30 pips, take profit at a good 90 to 100 pip level. You're looking at 1:3 risk reward ratios towards the upside. So, if you want to manage your trade, if you want to trade the news, look for that downside. But I think in the medium to longer term, we could see the pound dollar head up towards 1.4278.
Okay, thanks, Jin, for the analysis on pound. So again, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Okay, so I'm going to get Jin back in a little while. I'm going to ask him a little bit more about inflation. As we know, it's as he mentioned, it's a Wednesday CPI news event. So I believe a quick primer about inflation would help us all in understanding how the inflation affects the currency. But before I get him in, today we have Jonathan here, Jonathan from Forex Briefcase, to speak to you guys about how the Forex Briefcase management account works and how it can help you with generating passive income. So John, I'll pass the time right now to you.
Okay, good morning, guys. Thanks, Jin and Chinwei, for the intro and the DXY analysis from Scott earlier. All right, so what is Forex Briefcase? Forex Briefcase is a managed account service. Okay, we trade in the FX market to provide a passive return, a passive income for our clients. Currently, we are at about over 800 clients worldwide across 12 countries. And let me just bring up some highlights that we have. Okay, we have already been in operation for over 32 months, and up to today, we have a total ROI of 94%. What that means is clients who have been with us from the very beginning are almost experiencing a 100% return on their account already. But however, take note that as much as the numbers seem fantastic, it is not done overnight. It has already been close to 3 years, and breaking that down, that will bring an average return of about 3% monthly. Okay, it is through a steady and consistent growth, okay, trading the FX market, that brings us to the ROI we have achieved today. And if you're concerned about the drawdown, okay, as much as the returns are very attractive, our maximum drawdown that we had over this period is only a negative 2.24%. Okay, so we are definitely not a high-risk product. And throughout these 32 months, we also have only had 4 losing months. Okay, so unlike the experience that some of you may go through in FX trading, where you think that it is a very fast-moving and volatile market, okay, what you can experience as a Forex Briefcase client is a very steady growth. Okay, on your investment, we manage the risk very tightly and well. Hence, you can see from this graph a very nice, steady, consistent growth on your account. Okay, the numbers month on month are in the table below. As you can see, it's very close to our average return of 3% monthly. So what happens from here? Okay, this year 2021 up to date, we are already at 11.13% returns. Okay, that does not count the current month in May. And just for your information, this week alone, we are Wednesday today, Monday to Wednesday, we are already up by 0.5% this month. Okay, so what do you have to do? if you're interested, I'm sure the link is going out in the chat box. Register your interest there. You will have your accounts under your own name. Okay, you have full control, full visibility of the transactions and the details of your account. There will be an agreement signed between us and you. Okay, a formal agreement to state the terms. Okay, it is done with a very formal process, and best of all, you can get started within a day. Okay, so whether you are trading on your own, looking to still trying to find your way through FX trading, Forex Briefcase provides a platform for you to take advantage and earn from the forex market passively at the same time, or even if you're just an investor that's interested in to make money from the FX space, we are here for you. Okay, so don't leave your name down. We will get in touch and hope to see you on board soon.
Okay, thanks a lot, Jonathan, for that. I pasted up the links in the chat. All right, so back to the question that I have for Jean for the USD CPI news event tonight. So yeah, I mean, correct me if I'm wrong, inflation is not that direct of a economic indicator as like GDP or employment rate, because when employment rate is good, usually you expect US to strengthen. But inflation, you have targets and they have targets and all that. So just give us a quick primer about how actually is the relation with inflation to the currency. Jin.
All right. So inflation actually, I'll correct you when you're wrong, but inflation is actually a very, very important economic indicator in the overall scheme of things. Why is that so? The central banks look at inflation numbers to decide on whether they're going to taper on QE. They look at inflation numbers to decide on whether they're going to raise interest rates or not. At this point right now, we are in very different times. In normal situations, an increasing rate of inflation is likely to cause central banks to increase interest rates as well. That's the whole purpose. By increasing rates, they can slow down inflation a little bit, don't get into hyperinflation or don't get out of control, or for the economy to grow out of control. But at this point right now, the Fed or central banks are saying that they expect inflation to maintain higher for a longer period of time, and they expect to hold interest rates lower for longer. So it goes against the overall economic performance or economic standards, which is also why it becomes a lot more interesting to trade, a lot more interesting to manage your trades at this point when inflation data is being released or when central bankers are speaking and sharing their sentiments about the market.
Okay, thanks a lot, Jin, for explaining that again. So we have come to the end of the session today. So we'll see you guys tomorrow for another episode of the Currency Call and on Yen and Gold. So see you guys tomorrow. Bye.